My AI investment portfolio just posted another killer month, but now it's at a crossroads. So after crushing the market with, aggressive moves so far, the big question is, does it shift strategies or double down? Frankly, whatever it decides next could change everything. So what's AI going to do now? And what does that tell us about where the market is headed next? Well, the answer will probably surprise you, but more on that in a bit. Now, I'll go over the results here in a second, but let's get everyone caught up to speed in case you're new here. So about roughly 3 months ago, I handed $5,000 of real money over to artificial intelligence and told it to invest however it wanted, and I would not interfere in any way. The goal? Well, to see if AI could actually beat my own picks and the market with a semi-aggressive, high-growth strategy over 12 months. So far, the AI investment strategy is absolutely smoking both the market and my own stock picking performance. And we'll get into those numbers here in a second. But that said, every month I give an update here on the channel. So make sure that you subscribe to get all the future updates about this, experiment to see how it actually goes. Now, let's go ahead and dive into how this portfolio has performed in month 3. And spoiler alert, it was another solid performance. All right, so we started this whole experiment on April 24th of 2025. And 3 months in, the AI portfolio is up a whopping 26.29%.
Though short-term outperformance doesn't guarantee long-term success. 1 or 2 bad months could change the narrative fast.
That's absolutely true, Tiara, but you are killing it in the short term, right? 26%, that's no easy feat. Now, the S&P 500's gain in the same time frame is about 15.4%, and it's also outperforming my own hand-picked portfolio, which is at 22.7% so far. All right, so here's how each of these investments is actually performing in the portfolio. So NVIDIA, still the MVP. NVIDIA is up over 40% in my portfolio, and it just became the first company to hit a $4 trillion market cap, which is crazy. Next, Robinhood. This one's up a jaw-dropping 92.5%. Robinhood's stock has exploded in 2025 thanks to a 230% rally driven by strong Q1 earnings, a big crypto acquisition, and their European expansion. So they're doing well. From there, we have Google or Alphabet. That's up nearly 10%. Not the flashiest, but it's been a steady performer. And they've also been under some pressure this year as well, but their continued investment in AI and cloud computing is keeping them in the game. And then we have ITA, which is the Aerospace and Defense ETF. That's up 19.5%. And with global uncertainty and defense spending on the rise, this ETF has been rock solid. And lastly, we have the ARC Autonomous Tech Robotics ETF. So that's up just over 11% so far. And this investment seems like a no-brainer with its focus on AI and automation, as that's really just an exploding industry right now, and it continues to perform. So that all said, where do we go from here? Well, you might be expecting some big shakeup, but honestly, the smartest move right now is to just keep everything exactly as it is. And here's why the AI is doubling down on the current plan. So market timing is everything. The S&P 500 just hit a fresh all-time highs, and NVIDIA crossed a $4 trillion market cap milestone. So when the market is this hot, making big changes can actually introduce and add risk instead of reducing it. And also, sometimes the best move is just to let your winners keep running, right? Also, this AI-heavy strategy, it's right in the sweet spot. With over $1 trillion projected to be spent on data center infrastructure by 2028, and AI adoption ramping up across nearly every industry, the core holdings of this portfolio are perfectly positioned to benefit from those trends. Also, diversification is doing its job. So the portfolio isn't just riding one wave. I've got pure AI plays like NVIDIA, and fintech with Robinhood, big tech stability with Google, and a solid defense angle with ITA. Everything's working. And when you're up 31% and every major position is in the green, the best strategy is often to let the winners run. There's no need to tinker with a formula that's already outperforming the market by a wide margin. So we're just not going to. And also an important thing is that no single stock is running away with the portfolio. So the only thing to watch here is if one holding gets too big compared to the rest. But right now, we're still pretty well diversified and not overly concentrated in any one name. Now, this AI-first approach, it is working. The stock selection has been on point for sure. And trying to optimize a portfolio that's already crushing it could definitely introduce more risk than reward. So for this month, we're just going to sit. But we'll see what next month brings, because you never know. That said, if you want to see how all this, this whole experiment started and track every twist and turn along the way, Check out the full AI investment experiment playlist right over here. Each video there I posted builds on the last, so you'll get a complete picture of how this strategy has evolved over time, and it's pretty cool to learn the moves that AI has made.